We're capital raisers, right? That's what Tim's bread and butter is. And a lot of what we do is teaching people and educating people on how to attract investors. What are some mistakes you see? Because IRA investors are becoming more of a popular avatar for people as you guys, in part, educate people on why they should use them. So, what are some common mistakes sponsors make when they're trying to attract these IRA investors?
I think the biggest one is not leveraging experts like Camaplan to help educate those investors and simplify the process. Uh, Sponsors either provide little education or unintentionally overcomplicate things because they don't fully understand self-directed accounts themselves. So if you leverage Camaplan, and by the way, it doesn't cost you anything, but we're glad to talk to your clients. If we talk to them and then they invest, you're going to have more and more clients that do it, and we're going to end up with more and more clients. So it's a win for everybody.
Yeah,
Right.
I used to raise capital myself for a debt fund. And for me, it was time to talk to investors about self-directed IRAs. And I had enough, we were selling these fractional participations in individual fix and flip loans. So the investment structure was unique to unfamiliar to a lot of our investors. So I had to dedicate a lot of my bandwidth just explaining that, or we had a fund, how fund worked. I didn't necessarily have time or wasn't front of mind for me to be talking about self-directed IRAs with my investors. And I think that the same thing, if you're doing a syndication, some people have never heard of a syndication before. So if you're going to layer on a self-directed IRA on top of it, it can seem overwhelming. And so, yes, there's this huge capital opportunity with all this money that are in IRAs, but it can seem like it's too complicated for the capital raiser to try to explain. So to Carl's point,
Mm-hmm.
you don't have to be the expert. You just have to have the courage to bring it up and share it as a strategy with your investors. And then once they want to know more, then you can utilize us to help take the conversation to the next level.
Yeah, a mistake, Logan, is to demonstrate that the real financial advantages of using these accounts, right? Investors need to clearly see how using an IRA or 401k can help them keep 25 to 50% more of their profits over time. I like to say structure trumps strategy. Think about making an investment to risk, letting it sit for 3 or 4 or 5 years, and then getting the money. You get 40% less than the guy using the IRA after taxes
Mm-hmm.
for the same effort. So that
Yeah.
clearly needs to be done. And again, Matt and I will help you that out.
Right. And to Matt's point, that was going to be my next point. If I'm a syndicator, right, and I'm trying to raise money and inform I have to educate them on what a syndication means or what a fund means and a 506B. Like they have these questions. The IRA is not at the top of my mind because I already have, and I'm trying to close my deal and I'm trying to get inspections done. So leveraging someone like you guys sounds like a much easier idea to me.
Yes, if a guy says, "Hey, I don't have any capital that I can deploy right now. Do you have an
Mhm.
IRA or 401k you want to diversify?" It's a good segue to that.
Absolutely. And because you guys have a different perspective on talking to investors than a sponsor does, from that perspective, what do you think helps a sponsor establish credibility with investors early on?
Communication is critical. I think that's with anybody. I think having webinars, podcasts, Q&A sessions, definitely not going dark on people, conference
Mhm.
calls, maybe a newsletter, updates. Those things help build trust, right? Invite them to the office, let them see the books, things like that. Overall, sponsors should under-promise and over-deliver, always remain accessible. I think having a strong professional team, including attorneys, CPA, administrators, and advisor, also adds significant credibility because of the people that you surround yourself with.
Matt, do you have anything to add?
Well, I was just thinking about a sponsor who we work with, and this guy knows a lot about self-direction, like written a book about self-direction, as a matter of fact.
Oh,
So any IRA question that he gets from his investors, he can answer. I mean, 95% of questions he can answer, but he doesn't. He brings myself into the call or someone from Camo Plan's team because he appreciates the role that we play as a neutral third party to answer the questions to make the client or his investor feel more comfortable information from someone else as opposed to him just saying it. So I think able to, if we're talking about just in terms of having the IRA conversation, I think there's a lot of value in knowing how IRAs work yourself as the capital raiser, but also understanding that we can play a role in being a neutral third party to share information in a completely neutral way because we can't sell investments.
Right. And obviously, it's mostly education,
Yep.
right? Whether we're talking funds, syndications, taxes, retirement accounts. So, what do you think the most effective ways for sponsors to educate investors about self-directed IRAs without overwhelming the investor or overwhelming themselves and telling bad information?
The best approach, I think, is to keep things simple. I go on the KISS principle, keep it simple, stupid. It's one step at a time.
Mhm.
Should build partnerships or experts like Camoplan to help guide the investors through the process because you shouldn't be focusing on the investment. Let us handle the office processing. Often recommend that investors first open their account and fund their account so they're in a position to invest. And we're one of the only administrators, custodians that don't charge an annual fee until someone's done an investment. So we want them to get their account open, get their money ready so that they don't miss an opportunity, and then focus on the due diligence for the investment itself. So some of the most successful sponsors, and that said, sit in on calls with our mutual clients or investors, even open up self-directed accounts themselves so they fully understand the investor experience and what they're going through. And that also helps us streamline the process for the specific investment.
And you
Got
were
it.
talking about like the most effective ways to communicate. We do a lot of webinars like that. I will go and present to a sponsor's their leads about how to use self-directed IRAs, or if it's a CPA's network, we'll help uh, email campaigns where we can provide some copy, self-directed IRAs that they can use, and those are effective. But the most effective thing is very, very simple. It's proactively bringing it up when you have conversations with your investors. And it can just be as simple as, like Carl said, if someone's saying, you don't have the cash, oh, do you have an IRA? Or asking, how do you plan to fund your investment? Or do you plan to use qualified funds or non-qualified funds to fund your investment? And that could lead very naturally to, I didn't know you could do that. And then now you're off to the races in terms of having a conversation about an IRA investment.
And a lot of sponsors put a link to Matt's Calendly right on their website saying, did you know you can use your IRA to invest in this investment? For more information, schedule a call with Matt.
Mhm. I see that a lot with IRA tax advantage deals. You'll tell an investor something, and I love that you said that, Matt. People just say, "Oh, I didn't know you could do that. I didn't know that was a thing." Sometimes that's all it takes. You're just bringing it up. But obviously, we're talking about benefits of IRAs and how to educate your investors. But let's say I want to attract more retirement capital. Like, what do you think is a good educational or marketing strategy to attract those kinds of investors?
I think the simplest strategy, often the most effective, by starting with existing investors who already like the product, like the investment, who are not using tax advantage accounts, and then just show them the benefits. Now you have
Mhm.
more money and no extra and no more investors, right, that you have to talk to, right?
Mhm.
But to me, that's one of the first things, and it's one of the easiest things to do. And the other thing about that is it shows that the concept works with your investment, and we can also do webinars and make it available to some of our investors who aren't currently deploying their capital. Sponsors should consistently remind investors that IRAs and 401ks are available funding sources. already talked about, especially when the investors say their cash is already deployed. I think that demonstrating a side-by-side examples of investing with and without tax advantage accounts can be very powerful. Slide. It's also important to make eligible to answer questions from investors and their team, the attorneys, CPAs, and financial advisors. It makes them feel comfortable, confident when using retirement accounts for alternative investments. And we're used to that all the time. We help their CPAs understand it.
Gotcha. So starting at home, where hey, I already have this group of investors that might like and trust me. Let me just see if they have retirement capital available before I try to rewrite my marketing strategy to attract investors that, and that's my goal is to attract retirement capital, right?
Yeah.
There's some out there already in my list.
And what's good about that, starting kind of that targeted list of investors who've gone through a full cycle with you, for example, is they know you know them and they know your product. So you're not having to explain what a syndication is, right? And like we talked about before. So now you're ready to have, and presumably you have some rapport with them. So now that you're able to focus solely on the self-directed IRA part of the conversation, which obviously seeks out new capital opportunity with that investor, but it also begins to hone your skills as the capital raiser to speak more confidently about self-directed IRAs to begin with. So I think it works on two levels. And then, as you said, once you fine tune it with that group, then you can expand it out to and scale it with all of your leads that are coming in.
And let's say I am a sponsor, I'm someone who has a healthy list of retirement capital and self-directed accounts in my database. Are there certain characteristics of deals that seem more appealing to self-directed IRA investors? Is there certain characteristics or trends they look at that they prefer over others?
Same fundamentals that appeal to any investor apply here, right? Trustworthiness, transparency, reasonable risk, fair returns, and simple investment structures. What most investors want to look at, right? An example, it probably takes, I don't know, somewhere from 3 months to a year for an investor to get to know you and have confidence in you, et cetera, right? And that's more important. For us, it's not that important because the client's going to put their money with us and then we're going to turn around and send it out to you or the sponsor. So the money's going to be sitting with us for a day or two, and then their IRA is going to be holding a piece of paper that says they have ownership in a debt fund, a feeder fund, or an equity position. So really the things that are every investor looks for. I think also sponsors who provide educational resources about self-direction tend to stand out and create greater investor confidence because they have a wider role of potential investors.